coming from the Washington Post, saying Jerome H. Powell steps down Friday as chair of the Federal Reserve after running the world's most powerful central bank through a pandemic, the worst inflation in 40 years, and an unprecedented assault on the Fed's independence. So today marks that major shift for the U.S. economy as Kevin Warsh officially takes the gavel as the new chair of the Federal Reserve. The Senate confirming Warsh on Wednesday in a narrow 54-45 party line vote. Outgoing chair Jerome Powell did not leave the central bank entirely. He remains on the Federal Reserve Board of Governors, where his term will run until January of 2028. That fresh data showing inflation is still running hot, and speculation is already mounting over whether the Fed will be forced to hike those interest rates when they meet next month. But what does this leadership change mean for everyday businesses? Joining us now to break it all down is Dan Varroney. He's the author of Rethinking Economic Growth. He just published a brand new op-ed titled Fed's Next Challenge, Main Street Confidence. Dan, thanks so much for joining us.
Pleasure to be with you today.
Of course. So, Dan, today's a massive day for the economy. Jerome Powell's term as Fed chair expires today. Kevin Warsh officially taking the helm. You just published this op-ed about this exact transition. How will a Warsh-led Federal Reserve tackle inflation maybe differently than Powell did?
So I think it's going to be tackled considerably differently. Kevin Warsh's background as a member of the Fed Board of Governors and as a highly successful business executive brings a different focus. And that focus is around narrowing the mission of the Federal Reserve. And what I mean by that is that the Federal Reserve has been expansive in its focus. It's gotten into quantitative easing and dealing with shocks to the economy. What Kevin Warsh wants to do is narrow the focus of the Fed to what he sees as predictability and certainty, and focus it around inflation. Now, for small businesses, and I talk a lot about small businesses all the time, certainty means everything. For Kevin Warsh, he wants to deliver that certainty. Right now, he sees the Fed as having its fingers in too many pies and wants to narrow the focus.
So you had mentioned that Warsh's framework is fundamentally different, citing it's maybe more disciplined and less interventionalist. What's the immediate ripple effect of this leadership change on the markets versus the reality for businesses on Main Street?
So I think we're not going to know the immediate effect on the markets until he officially takes over as chair, and I believe he'll be sworn in sometime late today. So we'll start to see some of that next week. The Federal Reserve doesn't have its first open market committee meeting until the middle of next month in June, but he'll be working behind the scenes. He'll be looking through all the data, all the numbers. He'll be meeting with the Fed Board of Governors, getting soundings from them, and begin to chart his path.
So you had mentioned to me that even though the Fed, of course, doesn't meet again until June 16th and 17th, we should be preparing for those serious discussions about that potential rate hike. With those prices still high, do you think Kevin Warsh's first major move is going to be raising those rates, or do you think their hands might still be tied?
Well, so there's two issues actually three issues on the table, three ways they could go. They could keep the rates where they are and say, we're going to continue to watch the data. They could cut rates, or they could increase rates. So let me talk to the increase rates piece. Now they're all, the markets are saying that there's a 65 or 70% chance that the Federal Reserve will increase rates. So here's the issue, that if we're going to look at an energy price shock and compare it to what happened in the 1970s, it's a big mistake, because we're not comparing apples to apples, right? We don't have any wage price spirals going on. We only have an energy of an oil price shock. That's what's going on. Before this happened, prices were coming down throughout the economy. When the Iran conflict started, the Strait of Hormuz closed, we started to see prices going up. It would be a fatal mistake for the Federal Reserve to do that. Now, on the other side, there will be pressure for the new Fed chair to cut rates. Now, in the middle of an energy price shock, that will also be difficult for him to do. My sense is that he will build a consensus around let's stay the course for now and let's ride out this energy price shock and not create any other problems in the economy. Because if we raise rates, the stable employment situation could deteriorate. Businesses like small businesses will stop borrowing, will stop hiring, they'll stop investing. So for the time being, let's leave things as they are and see how this energy price shock plays out.
So, you mentioned the 1970s. Whenever you talk about that stubborn inflation and those high interest rates, people immediately panic. They think back to then. And you believe that's not the case. What would you say are the key differences between those inflation drivers of the 70s and maybe what we're facing right now?
So what was interesting to me when I researched back on it over the last couple of weeks is that we saw wages going up at outrageous numbers. So you had inflation that was going up dramatically, and you had employers that was looking to match it. And we had what was called a wage price spiral, and it kept happening. So now what we have is you've got wages and inflation not even anymore. You've got inflation that is surpassing wages. Inflation is somewhere now at around 4%, and wages are at about 3.7%. So we're not seeing the same thing happen again. And because we're not seeing the same thing happen again, why would we raise rates? Why would we want to send a shockwave through the economy and send that message to the economy? It would be a huge mistake.
You wrote that for small businesses, the predictability of borrowing matters almost as much as the rate itself. Are local business owners maybe sitting on their hands right now because they just have no idea what the Fed is going to do next month?
They've been sitting on their hands for years. When I conducted my book interviews, what was significant to me, clearly a lot of unpredictability and uncertainty around federal policy. But when we talked about the Federal Reserve and interest rates, they weren't quite sure what was going to happen next week, next month, or next year. That caused a lot of hesitation for them. And I believe that small businesses right now are absolutely uncertain. And if we make the mistake of raising interest rates, we will be sending the wrong messages to the part of the economy that represents 99.9% of the country's businesses.
The Fed has two big jobs, of course, fighting inflation, maximizing employment. Kevin Warsh is widely viewed as an inflation hawk. Do you think small businesses are worried that his strict discipline on inflation might trigger a contraction in the labor market, or are they actually welcoming maybe a cool off in that hiring competition?
In the latest National Federation of Independent Business survey, small business optimism was up a bit. I believe it was up a bit because they knew that Jerome Powell was leaving and Kevin Warsh was taking over. I think it's a very positive sign. I shared my op-ed with the small businesses who were in my book, and I got positive feedback around it's about time, and we're very excited to see Kevin Warsh as chair of the Federal Reserve. I think they're energized and pleased with Kevin Warsh in that role.
You call inflation a hidden tax that compresses margins for small businesses. If you're a local contractor or a manufacturer right now watching Kevin Warsh take over, what is the number one signal that you are looking for to regain confidence?
So I think the big thing is Kevin Warsh going to stick true to his word and deliver certainty? Is he going to narrow the Fed's focus and mission as he promised? Are we going to have predictability and certainty around interest rates? Those will be the key indicators for small business owners all around the country.
Let's look at the calendar. Kevin Warsh is President Trump's pick, and his term as Fed chair will outlast the current presidential term. If the White House, let's say, flips in the next election, then a Democrat president will inherit Trump's Fed chair for over a year. What happens to market confidence and Main Street if we get, a new administration that completely clashes with Warsh's monetary policy?
Well, there is still independence of the Federal Reserve. It will be up to the Federal Reserve chair to manage monetary policy as he and the Federal Reserve and the Federal Open Market Committee see fit. If there are differences are fine. The new president will have an opportunity at the end of Kevin Warsh's term to either reappoint Kevin Warsh or to appoint someone else.
All right, Dan Varroney joining us here on Live Now from Fox. Thank you so much for your expertise. We always appreciate it.
It's a pleasure.